Good morning, guys. Happy Friday. It is February Friday, February the 20th. And look at that, the weakness in the overnight again. It looks like it's just kind of drifting to the downside. And nothing super crazy. It looks worse than it is. We're pretty much kind of sitting here twisting in the wind. Today we get a bunch of news coming out. It's Friday, February 20th. We got the GDP read coming out at 8:30. We got personal income and outlay. That's the PCE index, inflation read, both at 8:30 this morning. We have a speaker at 9:45, a Fed speaker that is, and then we have new home sales at 10. And yeah, new home sales and consumer sentiment at 10. So GDP and personal income at 8:30, that's going to be the big one for the day. And then we had new home sales and consumer sentiment at 10. And then we'll see how this whole thing shakes out from there. So this is the first read of the fourth quarter GDP. And then we have the inflation read, also important. So this could be an interesting morning. Now, if everything turns out, if there's any negative surprises, we probably can see this market attempt to take this lower. If not, we may see volatility, but not necessarily direction. Anyone guess. It's anyone's guess. But the fact that we have been holding on to these highs for quite a while, you talk about elevator down days and big sell-off days, it hasn't really followed through with continued selling. So the whole month of February has been pretty volatile and pretty crappy in terms of directional moves. And there have been a couple of hard down days and then a little bit of retracement and down days. So just meandering around, not finding in a lot of direction, but it's not quite falling apart either. So I'm taking that as a good sign. So it doesn't mean it can't. It doesn't mean that we may not get that day when they take out support and we start seeing some further weakness. But this whole area down here in the ES, this big low volume area we have below us here is not been challenged yet. I mean, if I scroll this guy down a little bit bigger, with more range. This whole area down here is what I'm talking about. If that area comes out, that takes that down to the 6,500. That's a pretty good pullback if we get that far. Right now, all this selling and the rotation between different sectors has been pretty much holding the market where it's at. Some sectors looks like they got hammered. You sat in those stocks, you look like you have a big freaking sell-off, and other stocks have been as the beneficiaries of it. But it hasn't been, the general market hasn't been pulling back in any big way. Right now, we are kind of holding here in the range, getting into big time news, and we're going to be very interested to see today if we get a little bit of a positive reaction to it. A lot of good stuff happening, and as I said early on, the only thing I can see on the horizon is military action in the Middle East. If that starts happening, I think the market has a knee-jerk reaction. So. Short-lived, but knee-jerk to the downside, most likely. But right now, economic news-wise, I think we're in pretty good shape. Let's see what the GDP before I say that with super confidence. Let's see what the GDP and the PCE read comes out to be. So I'm going to start off range bound this morning. Yes, flat out range bound. I'm going to buy weakness, sell strength, and then let's see where they're going to go from there. So initially, we're trading a little bit to the downside in the overnight, but I'm looking to sell strength. If you're looking at the first one, 60, 68, 75s, 85s, 6900s, 6915s for rotations down. Looking to buy weakness, 68, 60s, 50s, 40s, 30s, 20s, down to 68, 10s. We had a pretty good down day the other day. They ran it all the way down here to 69.75, 67.95. And then we were right back up again, testing the highs at 69.25, backing off. So the market is pretty darn range bound. Right now in the tight range, where the lows it's right here at the 60, between the 68, 20, 30, and 4, 20, 30, and 40s. And on the upside, you're looking at the 6900, 6915s, 6925s. Outside of that, we may have a direction going. Could be to the downside, Could be to the upside. It just depends on what's happening. But that's how I'm gonna start off the trading day. If we get some big reaction and some big directional move, I'm gonna wait for them to take out these lows, the 68.20s, or the 40s, 30s, and 20s, these three support areas. Or if they start taking out that the 15s and 25s on the upside, if that happens, yeah, we have a potential direction going, and I would be a lot more aggressive in that direction. But right now, if they start trading higher, even if there's an initial reaction, it'll look pretty much like a little rally, but you're still running into pretty good resistance on the way up here and pretty good support on the way down. So you can see a little volume bulb behavior on the on the F1. The volume edge is right here at the 6900 and above it, and below it is like right below that 6820 and below that. So that's your volume edges. Your TPOs are pretty much following suit with that as well. So range bound trading to get started. Let's see how the news is going to drive the market, and let's adjust from there. So just to be clear, looking to sell strength, buy weakness fairly equally. Right now against the 68.75s, 85s, 6900s, 69.15, 69.25s. Looking to buy weakness, 68, 60s, 50s, 40s, 30s, 20s, down to the 68.05s. I would say below 68.10 or 68.20s, you start getting a lot more aggressive on the short side. That's how we get started. And let's see how this whole thing shakes out. On the NASDAQ has been the one which has been really taking it on the chin a few times. And a little bit more range, but they're pretty much the same kind of range bound. They never really got back up to this bigger attractor area at the 700s. They were just there. They stalled at the 500s, did not make it higher than that, and then backed off. So they're a little bit lower, holding around this 800 level, 24,800s. Right at this low volume edge here at the between the 6 and 800s. The volume edge right there. That's kind of what they're trading, and Nasdaq takes out these lows and just challenging this big low volume area. That's when you have some really nasty stuff potentially could happen. So they take out this 24,000. That move to the downside could take us down to 23,500 PD easily. But you see, I have no. This is 180 days back. We have no real data there. To go even further back to see what we have there. So 820 is kind of where we end up. And we get a little bit of data. Yeah, maybe with a little bit more data here. But you see this attractor down here at the 23,500s. That would be your next attractor on the downside. If you get that far down, it's going to look pretty gnarly. It's all this AI trade is going to deflate pretty good. It actually deflated pretty good, to be honest with you. A couple of those big companies are down like 30-40%, which is pretty good, you know. They go up hard and they come down pretty hard as well. Now that volatility in the stock market, they have stocks which moves like that. It's a function of high frequency trading and ETFs, primarily ETFs, where they sell baskets of stocks, and if they're going to sell, everything gets sold in that basket no matter what. So that's why you have this big across the board pullbacks. So right now the Nasdaq looking to buy weakness, sell strength pretty equally. Initially looking to sell strength against the 850s, the 900s, 950s, 990s, 25,050s, and up here to the 25,100s. We're going to buy weakness against 24,800s, 750s, 720s, 670s, 620s, 560s for rotations back up. So pretty much just whatever levels we have right now, because we've been back and forth now. Excuse me, probing these edges. On the downside, the 600s, on the upside, the 925,000s. And we keep going back to value. So starting off range bound, if they start taking out this upper area, the 25,000s, the bigger picture, or they start taking out that 650s on the downside, we may have a directional move going. Technically, you see Nasdaq has a couple of moves to the downside, so they kind of bias a bit to the downside on the capital flow, but I haven't quite shift my bias yet. It looks to me like we have this big support area at the 24,000 to 24,500, where as long as it holds, we don't really have a change in that in capital flow. So I'm still holding out for that, but it's if they take out the lows here and start challenging this low volume area, they may have to change our capital flow bias. And that could get gnarly. It could be like a couple of weeks or a month or so of pretty nasty stock market action. But we'll see. From what I can tell, the analyst and the money manager I listen to here on the news are pretty much positive and fully invested. At least what they say. And they're not talking about some are giving some warning signs, but it's not that this risk off kind of mentality out there. So we're going to sell strength against the 850s, 900s, 950s, 990s, 25,050s, and 25,100s. Looking to buy weakness against 800s, 760s, 720s, 670s, 620s, down to these 570s for rotations up. And then we have the 500s on the bottom there. So, I mean, it's a pretty wide range. I mean, it'll feel pretty gnarly. When the NASDAQ moves 200-300 points, it feels like a pretty good sell-off. But you're still just working in a big range. So watch those lower areas of or key areas. And if they come out, that's when you really have to worry about the directional move. Finally, the bond market. And I have to say, not much going on there. I took one bond trade yesterday. So that didn't go anywhere. It was one of those days where they just backed up once, and then unless you took your profit right there, they just grinded it back up again and then just flopped around. You can see they just stayed up here in that upper area. And the overnight took it a little bit higher, back down again. So it's kind of drifting up towards the 18s again. So it's you have such tight range now. It's drifting in this area right now. But as long as you hold above these 17, 15, 16s, they're technically up in this area where they can drive it all the way up here to the 19s, even higher. So as long as the long-term yields keeps coming down, I think the economy is going to be in just fine shape. So, but anyway, I'm not starting off range band on the bonds. Pretty tight range. We're going to sell against 1730 to 118s, 1806s. We're going to buy against weakness, 25s, 20s, down to the 15, 16s, so rotations up. But a pretty tight range to work in, and that's going to keep it like that for now. Alrighty, back to the ES and the NASDAQ, and what do we got? Like 10 minutes before news. We're time to go grab a cup of coffee, get ready, and then let's see how this GDP and the PCE numbers come out and how crazy that's going to get. Alrighty, we'll leave it there for now, guys. So good trading, and I'll see you back at 11:30. Later.